time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Knuckman, Chief Market Strategist, BullseyeOption.com. Thank you both for being here. Good morning. Alan Knuckman, as we've gotten in different kinds of prints, we have strong jobs. You saw retail sales strong. We saw jobless claims today, claims actually dropping. And so what do you think is the big picture happening here in the market as rates are at the highest levels since 2007 for bonds?
Right. But let's remember, rates started at 0, so they had to go up at some point. So we're back to more of a normalization of rates. The last decade wasn't reality for, for most people, I guess. We've never seen that in our lives before, and it was a very unique situation. So we're back to cut more, not even to the median. We're still at 5%. But what's most important is that the terminal rate, the markets are telling us there's a 50-50 chance that we'll have one more tiny rate hike by January's meeting. But then there's a 97% chance that by December of next year, rates will be here or will be lower than they are now. So this is behind us. The 10-year note yield, obviously was way overdone to the downside. Now it's getting a little bit overdone on this rally back. But again, in historical terms, it's at a very low level still.
Yeah. Okay. So in the meantime, you have picks for us today, or names you're watching closely. AMD is the first one up. What is it about AMD that jumps out at you today?
Well, I like how tech's been leading the way. We've had 3 consecutive positive weeks in tech, if you look at the NDX, and it's holding this 15,000 level, which is pretty important here. And what we're seeing is it filled in that gap that we had in September 19th to 20th. There was a gap down. Now, the S&P hasn't filled that yet. We'll come back to that in a minute. But I'm encouraged by how tech has filled that gap on the upside and has been holding. Looking at AMD had a big run from 60 up to 130. 95 is the midpoint of that big rally run. And guess what? That's where it held on this little pullback here that we've seen. We've got a nice bullish flag pattern here forming, a breakout of that flag, targets a big move. So I'm looking at the fact that you're also seeing leveraged option buying. So that's a very positive bullish sign. And looking at an option, I'm looking at a January call, that 95 strike. It's trading for about 15 right now. It's deep in the money, and it's going to perform very well if we can just get back up to that 115, 120 level, which is kind of the mid of this pullback that we've seen in this larger overall very strong trend.
Yeah, understood. I mean, we were just talking about NVIDIA a moment ago. What do you think, Ben, when you take a look at the AMD chart today?
Well, I see a stock that's trending higher on the short term. Unfortunately, it looks like it's already started to roll over. And on a more longer term time frame, it's still in a trend environment to the downside. So this is exactly what the bears are looking for in many instances. Taking a look first and foremost at a look at the more granular time frame. We've got a 15-minute candle chart here, and I do just want to speak to some of the strength we've seen because Alan was talking about a big run up here, and recently over the last few weeks, just going back to the lows we saw back around the end of September, down around 94, all the way up to 111. But as you take a look, more so as of recent, it appears as if we're starting to roll over a little bit and kind of losing some of that momentum to the upside. And that's why I start to look for some of these areas of consolidation that have formed, because they're going to help us determine if this trend that we're seeing to the upside still remains intact. And in this instance, you can see, unfortunately for the bulls, it doesn't. Why? Because, well, we were establishing these areas of consolidation to the upside, but look what's happened here. After forming one around 109, we started to break down. You can see not only taking out 106, but down to that key area 102. So losing momentum to the upside, and this happens to be in a trend environment to the downside as you look at a longer term time frame, and it just happens to coincide. That most recent failed attempt was right around this 112 level, big area right now. It's a retest of the highs from the end of August, beginning of September. Now, if we continue to show some weakness through 103, we're going to open up a door for a retest this lower extreme here down around 94. Let me take a step back. I want to show you where we are on daily candle chart here, how we're kind of pinched in between the 50 to 200-day moving average. You can see not a lot of conviction as of recent, but again, also a series of lower highs. You can see how momentum RSI is starting to roll over a bit here as well. Take out the September lows, and you could see some energy to the downside here.
Okay. And, what are you thinking when you hear that, a possibility of that energy to the downside? Alan?
Well, Ben and I are both chartists, but artists. You have to be able to see into those charts. And I see a bull flag after a big run up, so off that bottom. So, and I'm also seeing that leverage buying for me is a very, very strong indicator of smart money participating on the upside. Now, the 95 level is important to lean on because that's a 200-day moving average. It held a support. It held as a halfway support level midpoint. So that's what I'm leaning on. I'm looking at a 95 call, and again, January option has 3 months of time to see if this can bounce back. And I've got confidence in the tech sector, being that it held that it filled in that gap and it's been holding strong.
Okay, understood. It's at 103 today. Next up, you have Smartsheet. We don't talk about this one too often. Tell us.
Well, it's just a chart that popped up on my screen. It's got that bullish leverage buying, which is something that I follow, and it's been sideways. And we'll both agree that the longer something trades sideways, the longer time, the greater the significant breakout oftentimes. So we've been seeing it between 40 and 50 now for 2023. Again, I'm looking at a January option, a January 35 call, which is below that 40 level. The 35 call is trading for about 9. So, there's some positives here. And it's just looking forward to breakout and positioning with a limited risk in the money option to do so, counting on that leverage buying indicator that shows that money flow into that stock at this time.
Right, and that's the whole thing. When you watch that on your screen and you see what you think is bullish moves there, let's see if Ben agrees.
Yeah, I do. This one's been sideways for the most part. I agree with Alan. It's just a matter of time until it breaks out. Unfortunately, it just retested and attempted the breakout to the upside and stalled. Let's begin with the sideways consolidation because it's basically been 47 to 38. You can see not a lot of conviction on this chart here. A lot of rotational, kind of this wave type pattern that plays out. You don't have a really well-defined trend up or down. And as I take a step back, we can just establish at this point that what we really have here is just a well-defined upper and a lower extreme. That's it. So not a lot of information here, but we do have 48 and we've got 38, so we know that the middle of that range is kind of the pivot area. We're hanging out there. Let's move away from the 30-minute candle chart here and into something that's going to provide us a little bit more information. We always say when in doubt, zoom out. Alan's talking about how we have been in this area of consolidation, and it's sort of that pop bottle mentality, right? Once you shake it up enough, eventually once it releases, there's going to be some energy associated with it, and this is shaken up in this range. That's for sure very random, limited in terms of real conviction relative to that longer term trend we've been seeing to the downside. So high conviction to the downside on the left third of your screen, and then mostly it's been sideways since. You can see how we've been balancing around 38, so holding above that right now. But I also mentioned again how we just recently kind of tested and attempted to get something to go into the upside, potentially a bit of a head and shoulders pattern even forming there. Wanted to show you where we are on the 50, the 200-day moving average just holding above both. RSI, though somewhat limited in terms of participation of the upside. So again, sideways to slightly lower is the read on this one for me.
Oh, and so the RSI doesn't love your ideas at this moment, Alan.
Well, one of my triggers is also the 200-day, and we popped above that, so that's a positive. Now, like Ben said, we failed our first time, but this option has 3 months of time, and it's $8 in the money, trading for about 9 or so. So, it's the way to play as much as the stock, but I'm looking for the stock to shake out here. I really like this bottom pattern, and we've seen this time and time and time again.
All right. And last but not least, we'll take a look at Bank of America after we've obviously in the thick of earnings season. We're getting quarterly reports from these banks. What say you about Bank of America?
Banks are banking it, okay? Now, in this example, I know Ben's going to say BAC should be BAD. It's a bad chart, I will tell you. But it does have my bullish divergence, meaning it made new lows, it tested the downside, and rejected the downside. Now, it dipped down. We had been trading here between 27 and 37 for a year. Now, just recently, we dipped down, made new relative lows, and couldn't get any strength, and now we're back inside that range again. That's very much a positive. The trend overall is down in this chart, but banks are making billions. If you combine, Citibank, Wells Fargo, JP Morgan, and Bank of America, these 4 banks, their last quarterly profits just listed last week, those 4 banks came up with a $30 billion quarterly profit. Banks are printing money. They pay their depositors less than they're getting in overnight repo rate, so it's just a free grift until depositors realize that they need to get that higher yield, and we'll see if they do. All right, the way to play here, an April option. April has 6 months of time. This stock is bad enough to buy. It also has that leverage buying money flowing in. So I'm looking at the 25 call. Again, 25 is a multi-year low. 25 call, and that's trading for about 4. It's obviously in the money, and it's got plenty of time for performance. And you know how this works. When the sentiment shifts, and that's what I look for, is that sentiment shift sign of that bullish divergence, meaning we made new lows, but not new highs in implied volatility. That's a sign that the short sellers are running out of strength. Go to it.
Okay.
Go on, BAD,
Yeah.
Ben, BAD.
BAD. I don't know. Let's see what Ben says.
Nicole, I'll give Alan the fact that we have seen a bit of a shift recently, but the longer-term trend remains the downside, and we just failed at a key level, much like AMD. We're going to start off with a more short-term time frame here and look at the recent trend because it has been to the upside. A couple weeks ago, we were trading down around 25. You can see some of the momentum higher recently, topping out around 28. The question is, again, with AMD, are we starting to roll over at this point, right? Let's take a look at a couple of the areas that my eye was drawn to in terms of consolidation, where values formed and where the market's kind of paused. Because in theory, the way I see it, as long as we hold above the 26 level, this one is still establishing value to the upside. So again, I will give Alan the fact that there is some momentum higher at this point, but I want to show you what I'm looking at, even more importantly, stepping back from that 30-minute candle chart where there's only a certain amount of information that you can gather. Taking a look here, this one really speaks to what Alan was talking about in terms of how this chart is really not what the bulls were looking for in terms of shares of BAC. They've been coming under pressure, to say the least, recently down to 25. That was a level he pointed out. You can see how we're off that level here right now, but let me show you what's going on as we kind of test and retop here right around this $28 level. Let me show you the areas of consolidation that formed. Now, these are 4-hour candles that we're looking at here. So this chart's going all the way back to, we're talking end of July, 32.50, all the way down to this $25 level. And again, if we break down below 26.75, we open up a door for a retest of that lower level. I don't really see a rejection as of yet in this instance, still exhibiting some weakness, mainly leaning on this 28, this upper extreme here right now, and that failed, or that potential double top at that level. Let's take a look at where we are, much like we did with the other two names we looked at here today, Nicole, in terms of relative to the 50, the 200-day moving average is also why I'm kind of leaning on that bearish narrative here. Look where we are. We're holding below the 50, well below the 200. RSI is showing a little bit of enthusiasm to the upside, and again, I just think with this longer-term trend, what we're seeing here, potentially starting to roll over on the short term, this is, again, in line with the pattern that's been playing out. It's lower lows, lower highs, and take out 25, and you open up the door for further weakness there as well.
All right, and Alan, look, not at your 200-day moving average that you like to see. Final thought.
Well, again, it's you have the right to be long from 25. It's like putting in a limit order to buy at the lows. You've got limited risk. It's in the money. And if you've participated in BAC when it looked bad in the past years, it's bounced back. So I'm just looking for a modest bounce back. That 32 level is a halfway point of that range that we were in. So if it just gets back to 32, this option doubles in value, and I've got 6 months for good things to happen. And like I said, banks are banking.
Okay, Alan Knuckman, bullseyeoption.com, Ben Lichtenstein.
Thank you.
Thank you both for the big three today. Great to see you both. Really appreciate it.